are becoming a little bit more complex at the moment. So, so this is the team who have been working on this project since October last year. So basically, we spent quite a bit of time talking to people on the ground and collecting information and analyzing information. So what we will see later is the work of this team. And of course, there are lots of people who have helped us from various parts of the ecosystem. So I will not enumerate them one by one. Okay, shall we go ahead to discuss about topics? Crystal, do you want to take over?
Yeah. So like for today, we will cover what we do for our food delivery report. And the first will be evolution of food delivery landscape, key trends in 2021, key players and their strategies, global benchmark, and also the prediction of the future. So let's get started with the evolution of food delivery landscape. As Jianggan mentioned, that this is the second time we launch our food delivery report. So here is a recap of our previous report to see what happened in 2020. With COVID in 2020, food delivery grew fast. GMV achieved 183% year-over-year growth, hitting 11.9 billion in 2020. Indonesia, Thailand, and Singapore were the three largest markets in Southeast Asia. Among all the players, Grab's GMV is estimated to be 5.9 billion, contributing almost half of the region's GMV. Then let's go to 2021. What happened in the year that just passed by? First is Delta wave. Cracks emerge in the restaurant recovery as Delta rages. Here's a picture taken in Ho Chi Minh City in Vietnam, where the whole city was locked down due to Delta, and food delivery service therefore was suspended there. We also see players expanded the boundaries of food delivery to include groceries and more in 2021. The picture here taken in Singapore shows that both Grab and Shopee are entering grocery sector. Last but not least, we see that food delivery has become more deeply integrated into consumers' lives. Here's a picture is taken in Indonesia, shows that crowds of delivery drivers showing up at a McDonald's outlet to purchase BTS meal. BTS meal is named after a Korean famous boy group, BTS. They launched the special meal with McDonald's together, as most of the restaurants are unprepared to manage this turnout. Several McDonald's outlets in Indonesia were actually forced to close when too many delivery riders violated safe distancing measures. Overall, the market continued to grow, but at a slower pace as expected. But this year's GMV still achieved 30% year-over-year growth, hitting 15.5 billion. Compared to the first year of the pandemic, where orders surged across the board and a lot of stakeholders, including platforms and restaurants, rushed to adapt, 2021 is much more nuanced. We will discuss more in detail throughout the briefing. Let's zoom into market share. As you can see that Indonesia, Thailand, and Singapore were still the three largest markets in Southeast Asia. New players entered the market as Shopee Food rebranded in Vietnam and also expanded to 3 markets. Despite an increasingly competitive market, Grab, FoodPanda, and Gojek still retained their position in 2021. Grab is estimated to have contributed close to half of the region's food delivery GMV, closing the year at 7.6 billion. FoodPanda contributed 22% of the regional GMV, recording 3.4 in sales. Gojek is estimated to have ended the year with $2 billion in food delivery sales, making up 14% of the region's GMV. We will discuss all these food players in detail regarding to their strengths and challenges later.
Yeah, I think that let me add a point here. So we did this estimate last year in January 2020. January 2021. So afterwards, we received lots of questions from various stakeholders as well as observers. I mean, how did you arrive in these numbers? What's your methodology? So I think just to address this point, it was actually a lot of work, but fairly straightforward. I mean, we went on the ground to interview lots of people in the ecosystem, including delivery riders, including restaurants, restaurant chains, and the people who build ancillary systems for restaurants. We also spoke a lot with people who run logistic fleets, as well as people who basically handle payments. So basically, we cover the whole ecosystem across all the 6 major markets, and we also did some consumer surveys as well. And it's always interesting that the consumer's perception almost always not exactly match the actual market share that you have seen. And I think many of the industry stakeholders we spoke to, if we just ask them for their pure perception, they might have a bias towards what they see towards the end of the year. So the numbers we estimate here is full year. So some of the dynamics, of course, are different at the beginning of the year versus the end of the year. So, but nonetheless, the relative positioning of the players, as well as their overall sort of GMV, it should be. I think we're pretty confident about these numbers. So we will discuss more in detail about the strategy of each player, maybe a little bit of a perspective about each market to see how things have evolved. Back to you, Crystal.
Yeah. So let's move to key trends in 2021. Here, the key trends we see is that F&B establishments leverage delivery infrastructure more to create new brands and to scale. First, we see both restaurants and platforms test virtual or delivery-only brands. For example, we see here, Salad Stop here experimented with new brands online and offline, including Wuxi and Hebo. We also see Yummy Kitchen in Indonesia to partner with Grab to create delivery-only brands. This approach does not require significant upfront investment, as there is no rent or renovation of offline storefront. But to do this effectively, restaurants will need to have strong digital capabilities, especially in customer acquisition and retention, as online traffic can be more unpredictable compared to offline. The second will be Cloud Kitchen. Well, we interview a lot of stakeholders, and what we heard is that in Indonesia and Thailand, while cloud kitchens by platforms and restaurants are sustainable, those run by third parties are more challenging. We will discuss cloud kitchen more in the following slide. As you can see here, while cloud kitchen may help restaurants to boost the top line through increased consumer coverage and outreach, bottom line profitability might be very similar across operating physical restaurant, own cloud kitchen, or aggregator cloud kitchen. Note that.
Can I add one thing here? So this is the illustration that we found combining a few cases that we've seen in Singapore. And of course, when you look at different markets, there can be some variations in terms of detailed percentages. But one thing we see from this is, I mean, there's lots of discussion about how the delivery platforms are either benefiting or, according to certain commentators, harming the restaurant ecosystem. So this illustration gives us, I think, a fairly good understanding that, I mean, who is the real competition of delivery platforms is actually commercial real estate. Back to you, Crystal. Sorry.
Yeah. So like, as you can see here under Cloud Kitchen, delivery is the main revenue source, and lacking physical touch points could make it more challenging to maintain top of mind among consumers. Other benefits of Cloud Kitchen include capital flexibility, as there is no fixed long-term rents, and ability to pivot cuisine types quickly. Same as for e-commerce brands, for digital restaurant, omni-channel might be the best strategy to move forward. Yeah, so let's now discuss like key players and their strategies in detail. First, we have categorized players into first, on-demand third-party logistics that only provide delivery service, pure play that focus on food delivery only, super app, which have other services, including ride-hailing, e-commerce, payment, financial products, and extra. Also tech ecosystem players that food delivery service could be complementary to the broader platform. We also have infrastructure providers, including POS, restaurant integrated SaaS, and also restaurant online presence builder, which all make the ecosystem richer.
I think just to add a bit of a perspective here. So this image is illustrative, it's not exhaustive, so it doesn't cover all the players. But what we do see is that I mean, because now there's certain volume with delivery, so you can start to see that aside from major platforms, riders, consumers, and restaurants, you have other parties starting to come in at various capacities to either benefit or sort of streamline the processes of the platform. So for instance, there's a reason why we put Grab Express and Panda Go in the same category as Lala Move, because essentially, I think all of them provide API access now to restaurants who have their own customer base and they want to make deliveries to their customers without go through the three-part platform. So in that way, Grab Express and Panda Go are logistics services, and that's also part of the larger ecosystem that these platforms are trying to build. And when it comes to Post, this is actually a very interesting market that we are seeing. And of course, we know that in Indonesia, Gojek has acquired a Post company a while ago. And in Thailand, I think Lineman Wongnai has been trying to deploy Post to their cohort of restaurants. But we also see that there are a lot of Android-based or iPad-based Post players trying to capture different parts of the ecosystem. There's lots of dynamics going there, and I think that is itself maybe is worth a full study, because there are really so many interesting things happening there.
Yeah, so here is a broad picture of key players. First is Grab. Grab adopts super app regional focus strategy to maintain low acquisition costs and high retention. As their mobility is dominant and profitable, they focus on growing merchant services and deliveries, including food, market, and supermarket. Their approach in food delivery is to provide mass market service with differentiated offerings. For example, they provide multi-vertical subscription services, which means subscription packs that include food delivery, groceries, deliveries, and rides. And the next will be FoodPanda, with international expertise from their parent company, Delivery Hero. FoodPanda focus on food delivery service to provide more value to consumers and merchants. They're also doing grocery delivery and expanding into quick commerce now. Their food delivery approach is to aim strong and long tail coverage. They focus on top line growth and adopt promotion strategy to educate markets, as they are first to enter markets like Cambodia and Laos. The next will be Gojek. Deep rooted in Indonesia, Gojek also adopts super app approach in mobility, payment, financial services, and groceries and other deliveries. Gojek also built synergies with Tokopedia, which is a C2C e-commerce platform it merged with in 2021. Their approach is to focus on growing order value, as basket size in Indonesia is pretty low. So promotion strategy can be optimized for order values of about like $8 or more. Shopee Food leveraged large user base and transactional infrastructure built through e-commerce. So food, as mentioned like earlier, food delivery is seen as a complementary to the broad e-commerce platform. They focus on growing order volume rather than order value. Promotion strategy is also heavily adopted by Shopee Food. The last one is Lineman. Lineman is rooted in Thailand. So the synergy between Lineman, which the delivery platform, with Wongnai, the restaurant review apps, and also the leverage on Line's dominance in social and chat in Thailand, allows Lineman to contribute 22% of Thailand's food delivery GMV. So this structure is very similar to WeChat, Dianping, and Meituan synergies in China. So I will pass to Jianggan to explain this player's main strengths and challenges.
Sure. I think, thanks, Crystal. So as we mentioned, in terms of a market share, the sort of relative positioning of the players largely stay the same. And of course, there are some nuances, some changes over the course of the year in specific markets. I will go through each player in a little bit more detail, and just feel free to ask questions along the way. First, we look at Grab. One good thing about Grab this year, which made our life a little bit easier, is that Grab became a public company in December 2021. So some of the numbers that we have verified, especially Q1, Q2, and to a certain extent Q3 numbers, we could check with against their public announcements to see how far we are. And although there's one caveat, so their public numbers include also grocery deliveries, so which might turn out to be a bit larger than what we have estimated, which is only food delivery. And of course, from the announcements that they have made and from the filings that they have submitted, they have a lot of focus on deliveries, I mean, from food to everything. So of course, the company is fairly established in Southeast Asia. And since the very beginning, they managed to penetrate into each of the market actually fairly well, working with local government as well as local partners. So if you look at the delivery segment, it's actually I think probably the biggest segment that Grab has at the moment. And another thing that Grab has is that as part of the SPAC merger, it received lots of cash. That in addition to the cash it had already on its coffers, and gives it a very strong cash position for the next few years. Of course, there are challenges. I mean, first is that how do you manage growth and scale, and especially that you have lots of localization and each country is so different, and you're also working with different partners in each country. So there's actually quite a lot to manage. But I think that's consistent with all the regional players. So as a super app, it has its advantages, right? I mean, theoretically, you could have the lower customer acquisition cost and the shared infrastructure that can be used for multiple things. And of course, you have the rewards and payment infrastructure that's built on top of it. One potential challenge, which might come from time to time, is you have different priorities, right? I mean, various businesses of Grab are on the same app. So how do you allocate the resources? How do you allocate the exposure? And how do you optimize customers' awareness of different products? I mean, that could become a challenge. FoodPanda. So, I mean, for those of you who have followed Delivery Hero, you probably know that I think it was last week, once they announced their full-year results, and the share price took a hit. Of course, I mean, similar to Grab, and FoodPanda or Delivery Hero doesn't announce the exact Southeast Asia food delivery numbers. They have the food delivery numbers for Asia, which includes Korea, I think Hong Kong, Taiwan, Pakistan, and Bangladesh, plus the Southeast Asian countries they are in. So it's a fairly broad scope, and our estimate is that we don't have the exact breakdown from the official sources, but based on what we saw in 2020 and the sources we have on the ground, we assume that Korea is probably more than 7% of Delivery Hero's entire business in Asia. So when it comes to Southeast Asia, one thing is we look at their team is that they are very aggressive. And I think this is probably the first player who has managed expansion across various cities in different countries. I think in Malaysia, they are covering basically all the cities. In Thailand, they're in all the provinces. I think in the Philippines, I mean, their coverage in some of the smaller cities is actually pretty good as well. So this is a strategic choice, and I think at the beginning of the pandemic, they also did something which was different compared to Grab and Gojek. Grab and Gojek in 2020, because of the previous public market sentiment, they started to rationalize their spending. Whereas FoodPanda, I think, leveraged the low customer acquisition cost in 2020 to massively acquire customers. Of course, I mean, there's always debatable that which strategy is right. But I think FoodPanda has been facing some challenges. So first is the pure play approach. So we know that food delivery eventually you need to be profitable. But if we look at international experiences, most players are still losing money. And for those who are profitable, they have a very thin margin. They have volume and density, as well as the additional services they build on top of food delivery to make sense. So another issue that we see with a global player, I think that's consistent with the many global players, is that how do you allocate resources, people, and product features? So there's one episode which happened in Thailand. I think the Grab and Lineman Wongnai were plugged into the government subsidy system in Q4, which caused a large jump in terms of orders, because government was paying 50% of the value that the consumers placed orders with. And FoodPanda was not involved in this program. We don't know the exact reason, but there are speculations that it's because the product is centralized, so they couldn't make it in time to basically get plugged into the government payment system. But of course, that's speculation. We don't know it for sure. Gojek is relatively quiet in 2021, which is not exactly their style since their founding. So they have sold the Thai business to AirAsia, and I think their business in Vietnam is still going on. But I think most of the effort is concentrated in Indonesia, where I think the market share compared to Grab is more or less at the same level. At the beginning of the year, we actually predicted that the Gojek will merge with Grab because that seemed to be the most rational business logic, right? You basically stop competing on ride hailing as well as food delivery, as well as financial services, but try to build a profitability as well as customer value. But for various reasons, what happened is very different to what we had predicted. Gojek merged with Tokopedia to form GoTo, which, as we know, is preparing for public listing. So that opens up a lot of interesting possibilities, but also challenges, right? You could have the potential synergy because Tokopedia is for e-commerce has a very good use case and theoretically lots of good data points. But merging these two businesses and achieve the operational synergy is not that straightforward, and it will probably take quite a bit of effort. As we know where we stand now, I think that the synergy is very limited, which is probably the right strategy to do because you are still in a very, very highly competitive environment and you don't want to distract yourself too much. Shopee Food. So lots of questions about Shopee Food last year because at the beginning of the year, it was almost non-existent aside from Vietnam. But I think in April, I think March or early April, they started massive campaigns in Indonesia. So if our estimate is correct, they are probably doing millions of orders in Indonesia already. And in Q3 and Q4, they also started in Malaysia and Thailand. I think especially those in Malaysia, in the city of Kuala Lumpur, you will notice that in November and December, Shopee Food was very, very aggressive in giving out vouchers. And many of the vouchers are 4 ringgit, 6 ringgit, 10 ringgit, small vouchers, which is intended to boost order volume. And of course, there are lots of speculations of why they are doing this, which ranges from the growth, the slowing of e-commerce growth in Indonesia to the general strategy of using high frequency, low value orders to quickly secure a seat on the table. I think there's also debate on whether the strategy makes sense because we know that if you are very aggressively doing promotions, you attract many of the users who are not usual food delivery users, and your retention is probably bad. And I think I've seen some of the studies that that retention for Shopee Food particular cohort is indeed not great. But I think for a latecomer to try to secure a seat on the table, this is probably the rational strategy because you can't afford to wait for a long time to achieve this momentum. Strong execution, aggressive, and of course backed by a parent company which is which has the largest market cap amongst all the tech companies in Southeast Asia, although it has dropped about 67%, and there's lots of interpretations about what's the reason behind. We have our perspectives. I think challenges with Shopee Food would be focus on resource allocation because it really has a lot of different priorities at the moment. And you probably all know that as an e-commerce platform, Shopee has expanded aggressively into Latin America, into 3 countries in Europe, and now in India as well. So basically, there's a lot of things going on, and having the right people with the right resources to drive each part forward. And how do you make this happen? So I would say it would be a challenge. I mean, especially when I think Grab is already fairly established in all the capital cities in Southeast Asia. Lineman. So for those of you who are familiar with Thailand, you probably know that different from most other countries in Southeast Asia, most people in Thailand use Line as their daily communication tool. I think the active users of Line in Thailand ranges between 47 to 49 million. So over the last 5 to 6 years, I mean, Line has built a number of separate businesses and joint ventures to try to create a transactional use cases and monetize the user base they have. So Lineman is one of them, and I think it's one of the main ones of them. So they have built a fleet, I think initially with Lala Move, but now I think it has morphed into their own fleet. So they have also merged with Wongnai, which is the largest restaurant review platform. And this is actually a very interesting phenomenon because you don't really have large homegrown restaurant review platforms in other parts of Southeast Asia. Maybe a little bit exception for Vietnam, but in other countries, I mean, now I think largely Google is the main thing to go to. So Wongnai has, if I remember correctly, 800 to 900,000 restaurants on board. So basically, on one hand, they have the customer base of Line. On the other hand, they have the restaurant base of Wongnai. And of course, I mean, a large part of the operations is to convert these users and deliver them a good experience. Challenges, and of course, so Thailand is a very competitive market, and I think you have seen that in a previous page where we mentioned about market share, etc. How do you deliver that synergy akin to WeChat, Meituan, and Dianping in Thailand is operational challenge because ultimately I think Thailand is different from China, so they are, I think, figuring out their own ways to build synergy. Other players. Also notice that there are some other players in the market. So first, so this page is also illustrative. We just show a few players which have existed in different niches and different subsegments. Just to give you a sense, of course, there are more players that we have talked about, and you can refer to our report. So first is Deliveroo. So the market share of Deliveroo in Singapore, which is their only operating country in Southeast Asia, has reduced quite a bit. I think from 23 or 24% to 12%. So we also see that it starts to change the strategy a little bit and focus more on high-end restaurants. And amongst the users we have interviewed in Singapore, most of the loyal Deliveroo users are actually fairly well-off users, and the restaurants that they have spent a lot of time curating are good restaurants. They're also in delivery of groceries, and we think that it is probably the right strategy for them because for them to compete head-to-head against FoodPanda and Grab will probably be difficult. Although one variable is that I mean, Deliveroo now is a listed company, and I think that you can look at their share price in the London stock market, and I think it also has some shareholding of Delivery Hero. So maybe in future there might be some consolidation. We don't know yet for sure. The second player we'll look at is Robinhood, which is I mean, by the name, you will know that they have a purpose. Robinhood is run by one of the largest banks in Thailand. And it seems that their objective is not to make money from food delivery, but to create a local use case and an auto scenario for the bank and financial services offered by SCB. So of course, that different incentive gives them a bit of a sort of leeway, but also some challenges. As they are a new player, I think they are still relatively young, but they have secured some market share in Thailand. The third player we look at is called Chinatown Delivery. So they are only available in China. They're only available in Singapore, and they cover only mainland Chinese cuisines, the Sichuan, Mala, Hunan, Cantonese cuisines. One thing specific about this particular segment is that most people order this for lunch and dinner demand, and usually people order that in groups. So many of the restaurants on that platform would have average order size of $70 to $100. So basically a niche market, but very high value niche. And what this player is trying to do is that they're trying to go deep with this niche market by offering them e-commerce and other things. In addition to just food delivery. We also have Lala Move, which I believe is in the process of going for an IPO in Hong Kong. So the company is basically a logistics service provider, and food delivery is a key part of that. In Southeast Asia, they started the two-wheeler food delivery primarily with the collaboration with Lineman since I think 2016. But many of the fleets, so many of the restaurants who have sort of a private captive customer base would want to use a Lala Move, or as we explained, the similar services offered by Grab and FoodPanda to fulfill the logistics. So this is a two-sided platform, and it doesn't really touch the customers, aside from, of course, handing the food to customers. Crystal, back to you, please. You're on mute.
Yeah. So as you see here, pure food play will not be enough for a large tech platform in Southeast Asia to sustain a competitive advantage and profitability. Therefore, they're tapping into other sectors. Players are increasingly leveraging their on-demand delivery infrastructure and customer base to first increase customer retention and lifetime value. Second is to increase efficiency of existing infrastructure. Here's an example, like 66% of Grab's two-wheeler drivers are on both food and mobility. Third, they also attempt to build a moat in the competitive landscape. And let's zoom into grocery, which like all players are entering in this sector. As you can see here, grocery is a huge but under-penetrated market with a different board game than food, because grocery has larger selection with more SKUs, and the margin varies by product category and operating model. As far as consumers are concerned, there are two types of models. The first one will be on-demand delivery, which means smaller orders from convenience store items, like consumers are willing to pay more for the convenience. The second will be next day or scheduled delivery for larger orders like weekly grocery needs. Which model works better depends on a lot of factors, including city topography, customer segment, consumption power, and also supply chain.
Just a bit of comment about grocery as a sector, and of course we didn't go to the length to estimate the market size. This comes from sources like Euromonitor, and everyone knows that that grocery is much larger sector compared to just the restaurant services. I think historically, in different cities, that you have you have had different attempts to fulfill the grocery orders. And of course, you have the traditional supermarkets, you have the wet markets in Southeast Asia, and you do have the different online platforms. In Singapore, people probably know that you have Red Mart, which is basically a pure online supermarket. And I think that towards the end of last year, you also have a number of instant delivery players mushrooming across different geographies and getting funded. Our sense is that nobody has yet cracked how to do grocery in a sustainable way, in a profitable and sustainable way. So this is still a lot of experimentation. But since this is a huge market, and now, I mean, many of the platforms we talk about already have the infrastructure, so they are in a better position compared to many startups to try to tackle this market. Crystal, back to you.
So as all of the players are still exploring different ways to fulfill grocery needs, here are some models listed benchmarking with China. The first one will be integrated online and offline, self-owned storefront. Online, offline integrated customer experience means that customers can order online for offline pickup or delivery, or customers can shop offline and have goods delivered in minutes. This model means high capital expenditure and operational costs. However, it definitely offers valuable branding exposure to consumers. The second one will be 1P, owning inventory and warehouses. High density small warehouses in demand area ensures customer experience and control. Direct contact with suppliers could also lead to cheaper cost or more control on quality, but it is really operationally demanding. And the last one will be 3P marketplace. The advantage is lower capital expenditure, faster and cheaper to scale, as they don't have to own and operate warehouses and inventories. But it also means lower margins because it will need higher volume for positive unit economics. Well, with good system and operational integration with partners in place can provide good customer experience.
So when we look at all these different models, and the question is that which model will work, and the interesting thing is that every time we see a player making a move in a particular market, and we also see reports saying that, hey, this is the path that they will go into, they will be doing that. But as we understand, I think most of the large players are experimenting with different business models in different markets, purely because I think first, this is a still relatively early stage. And especially for online platforms, many of them are still in the process of figuring out what's the best way. And of course, in each market, we have fairly successful offline grocers. I mean, in Singapore, you have FairPrice. In Malaysia, you have like 3 or 4 high-end grocers, which are doing pretty well. And in Indonesia, you also have grocers of different sort of segments. But how to make it work online, how to make the delivery experience smooth, and how to do that in a cost-effective way, I think that depends on many factors, and some of the factors might shift, right? So for instance, we know that many players are trying the dark store model, so which means that you basically build mini warehouses, you stock the goods there, and you do that through instant delivery. The problem is that this model depends on lots of things for you to be profitable. I mean, of course, volume and density of the demand, and how do you optimize your inventory, and also the cost of rent is also a factor. If we look at, I mean, how players such as Meituan manage to achieve profitability in a specific segment, and you will know that there's lots of optimization of different metrics across the entire chain of operations. So that really is quite demanding on the players to go down into the very details. I once asked someone in China, what's the best practice to do that, and his advice is to hire computer scientists to build the processes, because really you need that kind of mindset. Anyway, Crystal, back to you.
So we also see like major players like Grab and Delivery Hero, they're improving margins. Inherently, food delivery in cities is a thin margin business, which depends on volume and density to make economic sense. So first, we think like more affluent customer segments provide higher margin potential. Second, like for groceries, fresh produce are of much higher margins compared to fast consuming goods. So there is no secret here. To convert volume and density into profits, players need to constantly improve operational efficiency across all relevant metrics. Also, the prolonged pandemic-driven consumer behavior provide enough time for platforms to build user stickiness, and more importantly, volume and density of orders to test their operations and optimize costs.
Okay, let's talk a little bit about the global benchmark. So we did this last year where we went into a lot of detail about, how Meituan optimize their operations, and I think you can refer that to in our previous report. But here I want to just highlight a few things. First is in terms of market share, and in US and China, which are the usual two benchmarks we use, that you see that 2 or 3 players occupy most of the market share. Southeast Asia at the moment, aside from Grab, which is only half, the other markets are relatively fragmented. And but how would the market move towards in the future? We do believe that the players which have the largest volume and operationally they are efficient, they do have a huge advantages over players who are relatively small, aside from the players who stay in a niche, as we have mentioned before. So we are Southeast Asia move into a situation like China, where you have 2 dominant players. We don't know, but definitely will be a situation similar to what we see here, right? You have 1 large player and maybe 1, 2 relatively smaller players in respective markets. And of course, one question people ask is that what happened to Thailand? Because Thailand, you really have the banks and different players joining the. You have AirAsia as well, of course. You have different players with different incentives joining the fray. So that will probably prolong the competition for a while, and it also makes the evolution more interesting because at the end of the day, we do see that the most food delivery players would become more than just food delivery players. So this is Meituan. They have built multiple services. But one thing I want to highlight here is that on the merchant side, what they have been doing, they have been sending lots of posts, and they have been trying to get merchants to buy their ingredients on the Meituan platform called Kuailv, which literally means fast donkey. Both are enjoying some penetration. They have encountered operational challenges getting everybody to use the services, but it shows a strategy of them trying to have more control over the supply, such that their moat against competitors, current and emerging, would be stronger. Another thing is that we hear lots of talk about whether Singapore or Indonesia should benchmark China or US or Europe. And we feel that you should really go down to the city topography and the consumption power and where that consumption power is distributed. So for instance, in the US, I think aside from a few cities, in many places, the affluent and middle class live in suburban areas. So that requires a different model of a fulfillment, which I think DoorDash has been able to capture pretty well. China, in a way, is similar to Singapore, very high density, very sort of well-planned cities where people sort of work in dense office towers and stay in dense apartment blocks. So volume and density would be the game to play. And then you look at Indonesia, so where you do have cities, you do have high towers, but many people live in houses, and houses are sparse. So and also the consumption power and labor cost is all different. So this all impacts how you should strategize and which segment you should focus, and what's the sequence of different sort of segment services that you should be using. What's next? So I think things have evolved to today, where you do have a number of leading players and doing significant amount of GMV, but of course, compared to US and China, the penetration is still relatively small. That's partially due to the fact that that Southeast Asia is different from those two countries, where you do have mega cities, whereas in US and China, you have clusters of cities, and then that makes the planning and the penetration very different. So we do know that the players are going into the smaller cities, and some of the players have already been in many smaller cities. And how do you make this efficient? And also at the end of the day, I mean, in the big cities, how do you get more penetration? How do you address to more customers whose consumption power is different? I mean, and how do you fulfill the affluent, the middle class, and the masses in a place like Jakarta effectively with the same platform? I think these are all the things that that players need to figure out. And of course, I mean, players are also entering groceries, which I think itself is worth a major study, because there's really a lot of different efforts trying to do grocery delivery in different cities. I think that's also what makes Southeast Asia quite interesting, because you really see different experiments. Okay, I think we have a fair number of questions. We still have 10 minutes. Let's try to address the questions. How has the average basket evolved in the last 3 years for food delivery in Southeast Asia? We do see that in 2021, there's generally an increase in basket size. I think some of the international platforms have been trying to track the basket size, but I think basket size is not the only question that we want to address, because when you try to raise the basket size, your customer cohort will reduce. So at the end of the day, will be a balance, right? I mean, whether you want to target the masses or whether you want to target the relatively affluent with high basket sizes. And we do believe that in many countries, the masses and the middle class to below have not been effectively penetrated yet. Why is Vietnam's food delivery market small relatively to its population size? Yes, 2021 was definitely an outlier, and food delivery was actually paused for a while. We do believe that, I mean, for Vietnam is that, I mean, I think before By Means started entering in 2019, there wasn't much major effort to acquire Vietnamese consumers outside the major cities. So, and also if you look at the consumption power that there is in Vietnam, is very different from what we have in Thailand, Malaysia, and Singapore respectively. I think for Indonesia, there's basically a lot of investment which have been going into the country. I also do believe that that the major regional platforms recognize that. So they would base their strategy on where their customer acquisition dollars and their operational investment would give them the best return. I do believe that Vietnam will be a target very soon, but I think at the moment, so companies can get better return from their investment into other countries. What do you think about the prospects of new players like Traveloka Eats and AirAsia Food in Indonesia? Will they make a portion of the market in the country? I think depending on their strategy, definitely they can penetrate into a portion of the market, leverage their user base, but will they be able to do it as, in a sustainable way? Is a question mark. I think specifically for Traveloka and AirAsia, there's one issue we need to bear in mind, is that the people are expecting COVID to end this year and travel to resume. So when that happens, for them to invest in a new service, which is food delivery, versus for them to double down on travel, which is on a growth trajectory, which one will make more sense? I think that's a question they will probably need to think very hard once that happens. What are the main causes of market share shifts in various regions last year? Why has Gojek lost share in Indonesia, their home region, for example? Is the main increase of Shopee market share as a result of the acquisition or their marketing tactics? I think same as Grab. I mean, Gojek has been trying to rationalize over the last 2 years. Our understanding from the ground is that I think Shopee's aggressive tactics took more market share from Gojek compared to Grab. You might attribute that to the fact that Grab's user base is relatively more affluent. But to understand exactly how these dynamics work, it probably needs a little more careful study. Another thing that we'd like to mention is Thailand. So some of you might know that I think FoodPanda fired an employee who went to some of the protests. I mean, of course, we're not here to argue whether the firing decision was right or not, but we were actually surprised that that decision actually cost their market share more than what we had thought. And we thought is that it's something that people will not take very seriously, and once you start continue to deliver services, give people vouchers, people will forget about it. But it actually was more long-lasting than we had thought. From Jason, SCB and AirAsia should really focus on cross-border innovation in banking and airline passenger customer service before they start figuring out ways to deliver meal lunch. Yes, I think let's try to find a way to send this to them, the strategy team. But I think SCB is a very different animal compared to all the banks that we have seen in Southeast Asia. You probably know that they also acquired the largest crypto exchange acquired 51% of the largest crypto exchange in Thailand. So they have the resources, and they really woke up from disruption of tech, and I think that their leadership is probably very aggressive to get into different parts of tech. So I'm not sure whether I would classify them in the same category as AirAsia. You mentioned that the Shopee Food customer retention is not great. What has been the main difference between Shopee and Shopee Food, despite both ostensibly using similar tactics of aggressive sales promotions, social commerce? I think very simple. Shopee is more established. It has been around for a long time, and it has accumulated a good seller base, which allows it to channel its customer traffic effectively to the merchants which can deliver good services. Shopee Food is relatively new, and I think if you speak to ground operators in different markets, their selection is not yet as good as the other players. So I think it's naturally expected that the customer retention at this stage is not great. But whether they can turn it around, whether they can achieve a meaningful market share which allows them to challenge Grab, big question mark. I don't know yet. We have to wait and see what they do this year. From UE standpoint, what's the average delivery cost per order at the moment, and how has it decreased, if at all? Can't answer this question because different markets are really different. I think maybe over the next few weeks we can compile a blog post about this, but it really varies across different markets. Might know more about rationalization of Grab and Gojek. Are they focusing on consumers, merchants, or driver partners in their monetization plan, commission rate, or delivery fees charged? I think for Grab, you can already look at their financials to see how they've been sort of spending on marketing. But generally, what happened in Q4 2019 is that after the sort of the change of public market sentiment, both players reduced their incentive spending and relatively focused on their customer retention. So that doesn't mean they are not spending, but it's just versus what they were doing previously, it's more rationalized, and that has a shift a little bit. And I do believe that. And of course, I mean, the best way is to talk to a lot of merchants and riders and hear their complaints, and you get a better picture of what they are doing in each market. Will the growth of growth story come to sharper slowdown, considering Asia has high metro concentration? The top cities have imbalanced high demand compared to other. Food delivery also has high potential to penetrate into rural areas. I do believe that that food delivery is a sub-segment of food services. So when we look at, I mean, the penetration is basically basically people are operating food services, restaurants, hawker centers, whatever, and how much percentage of that you can capture as food delivery. So I don't believe that, and at least at this juncture, food delivery is replacing people who are naturally cooking at home. So I think maybe a rational way is to map out, how food services is distributed. And I do believe that that in the smaller cities or in the countries that FoodPanda has gone into, like Cambodia, etc. So there's a demand, but how do you operate that demand effectively, knowing that the volume and density is not very high, is a question mark. We know that in China, there's a combination of agent franchise that many of the platforms, they don't really operate in smaller cities, they outsource to somebody else. In Southeast Asia, we don't yet see the players have that level of sophistication yet, although we see some attempts towards that direction. How did Vietnam's lockdown, which saw grocery delivery return before the race, impact grocery experimentation? I think it impacted sort of the players in general. How they manage their operations, and of course, I think the market share might have been impacted, depending on which one was the most resilient and how they resumed the services after lockdown. So I do see that grocery experimentation is still in the early stages. So I wouldn't say that we were able to see exactly how this factor has impacted or how the other factors impacted, because the overall market size is very small. Which part of the capital cycle are we in? Are we still seeing a lot of capital flowing and players forming still on the ground? How should we think about fundamental rights to win? I don't think it makes sense for other players to start. But of course, in areas like grocery and stuff, I think from early stage, there are lots of new startups experimenting. Maybe they will figure out things, they will crack how to do delivery earlier than the big players. So that might create interesting acquisition opportunities. What do you think if merchants have their own delivery platform? There are a number of services and SaaS platforms that allow merchants to do their own delivery platform, and also there are players which help them fulfill the orders like Lineman, PandaGo, etc., and Grab Express. So of course the game essentially comes down to that. What's your captive the audience, and how the unit economics work for you? Does it make more sense for you to do it on your own, or it makes more sense for you to pay the tech rate to the platforms and don't have to worry about it at all? Okay, I think we have about 10 to 20 more questions. We're actually running out of time, so we will try to address the remaining questions either through an email or through a blog post. But thank you very much for attending this. For those of you who are interested in understanding what's happening at Shopee, so Momentum Academy, which is a subsidiary of Momentum Works, is organizing a chat next week on this topic. So of course, you are all welcome to join. Thank you very much, and have a great afternoon and have a great weekend.